Real appreciation equals money realized, not on paper. This is the quote what I read recently, and this is the reason I'm making this content, just to give an idea how this quote makes sense when it comes to real estate investment. Welcome to my channel. My name is Arun Krishnan. I'm a realtor who totally focus on new launch project. I take care of more than 200 investors all across the world. And what I really help you is to find out the right investment, both strategically and emotionally. So let's deep down into the quote what I just mentioned. I would like to rewrite the actual quote was like the real appreciation is equal to money realized, not on paper. This makes huge sense in terms of real estate investment because this is what happening, and this is one of the reason why in real estate people have stopped trusting the market informations or marketing. This is one of the biggest reasons, because capital appreciation is not something which has been shown on paper. It's not something which is done through marketing. It's not something which really makes good sense in advertisement or some talk of town. No, that's not how the real market capital appreciation works. Real appreciation really lies, let's say you entered in like 5,000 rupees and you're trying to sell it 8,000, there should be buyers at 8,000. That's the capital appreciation. You invested in 5,000 and you have been informed and discussed about the kind of appreciation happening. It's going out of the roof from 10,000, 12,000. These are all like on words. These are not real capital appreciation. Now a lot of factors come into this picture when it comes to such kind of stage, which I totally understand, but we have to keep this concept in mind to get a better understanding when it comes to investment. Now, considering this term, I would like to take up certain points which you have to keep in mind before getting into any real estate investment. Number one, builder appreciation or builder price increase is not equal to capital appreciation. You know, a builder, if let's say a builder is appreciating his price every quarter, uh, the builder launched at 5,000 and every 3 months he's increasing the price 1,000 rupees square feet. So 5,000 has gone to 6,000, 6,000 has gone to 8,000, 8,000 has gone to 9,000 in 1 year's time. Now the communication goes in such a way that my investment, which was done in 5,000, has gone to 9,000 rupees in 1 year, 1.5 years, which is wrong. That's a builder appreciation. It's not a market appreciation. Market appreciation is different. The market appreciation really hits when the product gets completed. When you try to exit the unit, that's where you realize the market appreciation. When the advertisement is on, when when the marketing format is really high, when the builder is spending more on advertisement, brand value, a lot of factors involved in such kind of appreciation. Not every builder could increase the price also. That's also a valid point. Any builder, if they're increasing the price and sale is happening, that's a very positive note, because people are still trusting even at that price. We can't just blame it on just marketing or advertisement. There are a lot of history in terms of their previous past project. Credential really matter in such kind of demand. So we really respect that part, but still, I'm purely talking in terms of an investment portfolio. When it comes to that, this is one major factor. Builder price is not similar to capital appreciation. Now, when it comes to second, I would be more talking about a strategy which you could use to give a cover to what is happening in market. Let's say you have gone for a A-list builder paying a percentage, so 60% more appreciated price or like a different price from the market. You went for an A-list builder, and I totally respect the fact that you selected a reputed, good quality builder and you're paying premium to it. Perfect. But when it comes to an investor perspective, what you should do is you should consider the B category builders pricing also. I'm just giving you a scenario. Let's say you went for a builder. They are charging you 13,000 rupees square feet in that area. Now, the same area, a different builder, the average B category is selling at 7,000 rupees. There is a big gap. There is almost 100% higher price. So you need to understand that's kind of an inflated price going on. This is a builder price. This is not a market price. There won't be 100% increase in terms of pricing for a B category and A category builder in an area. When you go to a different aspect, it matters, but when it comes to township amenities, it matters, but there is a limit. So I'm not talking in terms of an end user perspective. I'm talking in perspective of an investor, where you have to keep a tab on this aspect before investing. If you have plans to exit in 2 3 years, there should be, the market has to really match it. I took an example of Bangalore and Kochi. Those two market work in a different model. It's when it comes to Bangalore, even after the project get completed, you have appreciation happening. In Kochi, you will understand that after the completion, the kind of appreciation is little bit controlled. So you need to keep all those aspects too in mind before considering the realized capital appreciation. And the third point, which I would like to say, is that it can be a routine which you can use. It's not a proper strategy that you can consider going through sites like Magic Bricks or 99 Acre just to get a fair idea about the market. So you can go through those sites where you will get a basic understanding about the pricing. I'm sure they're averaging out and showing it in website, but still you get a fair idea if you are like investing in that way. The fourth point, which I would like to mention, is that going for a rental calculation makes a big sense actually. So let's say you invested 1 crore and you're getting a rental of 30K. So you're getting a 3% there in that area. That means that area is fetching 3%. The project what you are actually investing, the price has shot up in such a way that your pricing is 2 crore. And if the rental in that area is like, let's say 45K, there is a big difference in these two. So rental market can be used as a parameter, basic parameter. These are all not 100% sure, but can be used as a parameter where you can understand the current market trend. Because if that area is so highly in demand, eventually the rent will increase. Seen rental market going off the roof on area, certain pockets of Bangalore and all. That's because of the demand and the inflow of people in that area. That also would be related to the capital appreciation aspect also, because rental really plays that big role. Now the fifth way what I really work out here is you should discuss, meet, have an understanding with the previous investor. Just to give a basic understanding, let's say you are investing in a township project. You have three phases. Phase one is already delivered, people are staying there. Phase two is on launch right now. They are coming up with an X price. You have to speak to the investors of phase one. This phase one people will give you a clear picture about the appreciation, what has happened. Phase 1 and phase 2 will be having a clear competition within the project. If the price is not jumping on each phase, a person who is coming on phase 3 and phase 4, he won't be making that much money, because the moment he put this project on resale, this guy is also listing, and if the market price is not going up, he will be listing at a lesser price compared to your phase 4. So these are the aspects which you really need to consider and think about, rather than just going behind big brands and their pricing strategy. Phase one, the guy must have bought it for 4,000 rupees. Phase two, 8,000. Phase three, 9,000. Phase four, 12,000. Now the market also should increase in that way. This 12,000 guy, after all the registration, he would be listing it for 13,000. If the market didn't grow, when this phase one guy sells it, he who bought it for 4,000 or 5,000 rupees, he would be listing it for 8,000 or 9,000, which will never match to your price. So you need to have a clear understanding here. The points what I mentioned are not strategies. Please keep in mind it's not at all a strategy, but some points you have to have a understanding rather than really going for big advertisements and big short projects. You have to have things in mind as a clear idea so that before you invest. And whatever I discuss, 60 to 70% I'm keeping investors in mind. It's not end use. So if your family really like to have a township with great quality, great location, don't think about all those aspects. Just go for it and execute your emotion. Go for the best house for you. I think that makes more sense rather than just thinking about all the strategy. But if you have investment perspective in real estate, these are some of the points which I would like to cover. So for more videos like this and more idea, thoughts, whatever I'm sharing, even through this video, I'm also trying to learn a lot of things. I'm also comparing with my experience with the data, current data. So it's an interactive platform. I'm sure if this is adding value, do subscribe in my channel. And if you want to have a detailed discussion about your investments, do reach out in this number shown. We can have a consultation call, or we can have a detailed discussion. So have a great day. Good luck.